I've been starting to come around to the idea that this could last a lot longer than people anticipate. Um, yeah. So, basically, when you're buying one of these companies, you're buying two things. You're buying the BTC, but really what you're buying is the premium, right? And you're sort of taking a bet on how much premium there will be in the future. Because if BTC goes up but the premium goes down faster, then you're actually going to lose money. And as more and more companies come on board, what they're competing on is not the BTC; they're competing on the premium, and they're potentially going to, because they're competing to offer you sort of better and better terms. They're offering you cheaper and cheaper premium. Um, so my initial thinking over the first few months of this trend was that premiums are going to go down to zero. Everything's going to be priced to the price of BTC, and the trend will end because these companies won't have the means to purchase more BTC. I no longer think that's possible, and I no longer think that's possible for two reasons. First of all, they're not just relying on the premium anymore. They're not just selling shares in order to buy BTC. They're starting to be able to tap into debt markets, and those debt markets are extremely deep and can offer very, very significant yield, which is still below the cost of below sort of like the returns that you get on BTC appreciation. The second thing is there's a very, very strong reflexive effect here, right? So the more these companies exist, the more they're buying BTC, the more pressure there is on BTC, the higher the BTC price goes. The higher the BTC price goes, the higher the shares in these companies go, and then that sort of desire to close that gap on the premium is diminished somewhat. So I think this could go on for quite a while.